Before we deconstruct the brutal transfer of power currently shaking the executive boardroom of a global economy, I have exactly 3 critical questions for you to answer in the comments below. Number 1. Are you still studying traditional corporate finance, completely blind to the fact that financial engineering cannot print physical lithium, copper, or silicon? Number 2. If the global supply chains collapses tomorrow due to geopolitical friction, does your company's chief financial officer possesses the architectural skills to physically manufacture your product from your own waste? Number 3. Do you understand the lethal mathematical difference between the managing digital numbers on a balance sheet and controlling the life cycle of a physical atom in a closed-loop grid? Let me know your answers. If you are new to the channel, here is my intro. I'm Dr. HR. I approach the global labor and capital market not with emotional, comforting advice, but as a structural, algorithmic system. I hold a PhD in human resources, a master's from prestigious Tata Institute of Social Sciences, TISS in Mumbai, and a bachelor's in computer engineering. Operating on the ground here in Dubai since 2010, consulting for Tier 1 corporate entities, sovereign wealth funds, and apex tech founders across the Middle East and the Indian subcontinent, I have monitored exactly how global power shift. The market does not reward you for manipulating fiat currency. It rewards you for dominating absolute physical scarcity. The era of the CFO is officially over, and the balance sheet as we know it's dying. In today's hyper-volatile global circular economy, financial engineering can no longer hide the terrifying reality of resource scarcity. Supply chain managers are aggressively seizing control, turning physical waste into massive enterprise wealth through unyielding power of closed-loop logistics. What if I told you that managing a physical atom is now mathematically more profitable than managing digital numbers? As we transition violently to a circular world, the strategic core of a corporation has shifted permanently from the boardroom to the warehouse. Discover exactly why mastering resource flow creates infinitely more long-term value than any traditional financial strategy. It is May 2026 and the companies winning the global race have one specific thing in common. They have replaced the theoretical financial mastery with absolute physical mastery. Supply chain leaders are now the ultimate corporate authorities because they control the life cycle of finite material. Learn how circularity is transforming every single scrap of industrial waste into sovereign gold. Before I completely dismantle the illusion of a traditional CFO, expose the exact thermodynamics mechanics of the circular economy, and give you the precise architectural blueprint to pivot your career from a biological procurement clerk to a sovereign resource architect, hit the subscribe button and press the notification bell. I post daily videos showing you exactly how to navigate the global labor and capital market using cold, hard engineering logic. You do not want to miss these execution protocols. Stop counting the money, start commanding the atoms. Grab a notebook, it is time to engineer your physical monopoly. Phase 1. The provocative shift. The death of a financial engineering. We must first diagnose the exact debilitating structural vulnerability that has rendered the traditional chief financial officer obsolete. For the last 40 years, the CFO was undisputed king of the corporate hierarchy. They generated massive corporate wealth, not by building better product, but through financial engineering. They executed stock buybacks. They optimized tax structures through complex offshore routing in British Virgin Islands. They leveraged low-interest debt to artificially inflate earning per share, the EPS. They managed a world of digital numbers completely decoupled from the physical reality. In May 2026, the paradigm has suffered a catastrophic collapse. We have hit the wall of absolute resource scarcity. You cannot use a tax loophole to manufacture cobalt. You cannot execute a stock buyback to generate fresh water in the Middle East. You cannot use debt restructuring to consume rare earth metals for your semiconductor manufacturing plant in Pune or Bangalore. When global geopolitical fragmentation shatters the traditional linear supply chain, the CFO is mathematically paralyzed. They stare at an Excel spreadsheet that says the company has a $1 billion in liquid capital. But the supply chain manager looks at the physical grid and says, "We cannot secure the microchip from Taiwan or lithium from Africa. Your $1 billion is completely useless because you cannot buy what does not exist." The balance sheet is dying because it only tracks fiat currency, and the fiat currency is subject to inflation. Physical atom, copper, silicon, lithium, gold are subject to the laws of thermodynamics. They are finite. The companies that survive 2026 are realizing that operational survival does not depend on person manipulating the budget. It depends entirely on the operator who can physically secure the raw materials required to keep the assembly line moving. The supply chain manager is seizing control because they are the only executive who interfaces directly with physical reality. Phase 2. The value creation discovery, atoms over numbers. To understand the sheer magnitude of this wealth transfer, you must decode the physics of the global circular economy. We must understand why managing physical atom is now exponentially more profitable than managing digital numbers. The traditional linear economy operated on suicidal algorithms: take, make, dispose. You extract raw material from the earth, you manufacture a smartphone or a laptop, you sell it to the consumer, and when it breaks, it goes into a landfill. In this linear model, the moment the product is sold, the CFO books the revenue, and the product becomes irrelevant. If the product breaks and is returned, the CFO classifies it as a liability, a write-off. The Apex supply chain manager in 2026 looks at the exact same broken smartphone and sees something entirely different. They do not see a liability, they see an urban mine. We are executing the transition to closed-loop logistics. Inside that broken smartphone is gold, silver, palladium, and lithium. In the 2026 extraction, a gram of gold from discarded electronic waste, the e-waste is mathematically cheaper and requires less energy than mining a gram of gold from physical mine in the earth. The strategic core of the corporation has shifted to the warehouse because the warehouse is no longer just a storage facility, it is a resource extraction node. The modern Chief Supply Chain Officer, CSCO, architects a system where the company never actually loses control of the atom. They deploy reverse logistics. When a consumer finishes using a product, the supply chain routes it back to the corporate facility. The product is disassembled, the core raw materials are extracted, and those exact same atoms are used to manufacture the next generation of product. The CFO buys a raw material at a massive premium on a volatile global spot market. The CSCO harvests the raw material from their own customer base at a fraction of the cost, completely insulated from a global market shock and geopolitical embargoes. This is the value creation discovery. Mastering the closed-loop flow of a resource creates an unpenetrable sovereign data moat that no traditional financial strategy can touch. Phase 3, the future of business reality check, the sovereign architect. Let us apply this macroeconomic physics directly to the global hub of currently driving the transition, the UAE and India. It is May 2026. The company is winning the global race has replaced financial theory with physical mastery. Look at the UAE circular economy policy of 2031. The government of UAE recognizes that a desert nation importing raw material is a massive strategic vulnerability. They are aggressively mandating a transition to circularity in manufacturing, food production, and infrastructure. The sovereign wealth funds are not investing in traditional accounting firms. They are pouring billions into advanced autonomous logistics, AI-driven waste sorting and material recovery facilities in Dubai. The executives who can architect a localized, closed-loop supply chain for construction material, taking demolished concrete, crushing it, and synthesizing it back into a 3D printed housing structure, commands a higher salary than a CFO of a real estate firm. Why? Because the supply chain manager guarantees the physical execution of the project regardless of a global shipping delays. Look at the Indian tech and manufacturing sector. India is executing a massive Make in India hardware push, but they face immense energy of raw material constraint. The Indian government has enforced brutal extended producer responsibility, the EPR laws. If a tech conglomerate sells 10 million laptops in India, they are legally mandated to recover and recycle a massive percentage of that e-waste. The CFO cannot solve this legal mandate with a spreadsheet. Only a supply chain manager can architect the granular, highly complex, reverse logistics grid required to physically retrieve millions of devices from consumers across Tier 1 and Tier 2 Indian cities, process the lithium batteries safely, and feed the atoms back into the manufacturing plant in Chennai or Noida. If the supply chain managers fail, the company is legally banned from operating in the market. The supply chain manager holds absolute existential leverage over the corporation. They are the ultimate corporate authorities because they control the life cycle of a finite materials. Phase 4, the physics of a closed-loop wealth, the PaaS protocol. How does the supply chain manager actually turns every scrap of waste into gold? How do they fundamentally rewrite the corporate revenue model? They execute the product as a service PaaS protocol. When a company adopts a true circular economy, they stop selling ownership and start selling access. Let us analyze a massive global manufacturer like Philips or a jet engine manufacturer like Rolls-Royce. In the old model, the CFO wanted to sell the MRI machine or the jet engine to our hospital or the airline for a massive one-time lump sum. The supply chain manager of 2026 stops the sale. They say, if we sell the MRI machine, we lose control of the titanium, the copper, the rare earth magnet inside it. We cannot afford to lose those atoms. Instead, the supply chain manager dictates a new financial model. They lease the machine, they sell the scans as a service or power by the hour. The hospital does not own the machine, they pay a monthly subscription to use it. When the machine reaches the end of its life cycle, the supply chain automatically retrieves it. The corporation retains absolute ownership of the physical atom. They refurbish the parts and deploy a new machine. By retaining ownership of the atoms, the supply chain manager has single-handedly transformed a volatile one-time hardware sale into a massive, predictable, high-margin, recurring software-like subscription model. The CFO did not create this wealth. The CFO merely recorded the recurring revenue. The supply chain manager engineered the physical architecture that made the recurring revenue mathematically possible. The supply chain manager is generating infinite yield from finite resources. They have decoupled economic growth from the raw material extraction. This is the holy grail of the 21st century capitalism. Phase 5, the sovereign resource architect, your career pivot. We have diagnosed the death of a financial engineering. We have exposed the value creation of urban mining, mapped the UAE and Indian circular mandate, and decoded the PaaS protocol. The final phase is the execution of your personal career trajectory. If you are currently a procurement officer, a logistics coordinator, or even a diligent financial analyst, how do you pivot to capture this massive transfer of executive power? You must transition from a biological box mover into a sovereign resource architect. Step 1. Eradicate linear thinking. If your resume highlights how well you negotiated a 5% discount on raw material from China, you're advertising yourself as a legacy commodity. You are bragging about linear extraction. You must rewrite your cognitive framework. You must master the physics of value stream mapping for reverse logistics. You must learn how to calculate the exact thermal and financial cost of retrieving a product versus building a new one. Step 2. Master the digital twin architecture. You cannot track millions of atoms using a clipboard. The Apex supply chain manager in 2026 commands the blockchain and the IoT, the Internet of the Things sensor. You must master the concept of a digital product passport, DPP. This is a digital twin of a physical product that tracks every single material used in its creation, its carbon footprint, and its exact location in the physical world. If you can build a data architecture that proves to regulators your supply chain is 100% circular, you are indispensable. Step 3. Broadcast your structural dominance. You cannot wait for the CEO to realize they need you. You must aggressively force the market to recognize your leverage. You step into your acoustic-treated digital studio, you deploy your Elite Cineline gear, your Sony FX series camera with a razor-sharp cinematic lighting, you import the complex, localized flowchart of a closed-loop e-waste recovery system in DaVinci Resolve 20. You record a highly structured, unsentimental video essay. You do not talk about saving the environment. Emotions is irrelevant. You deconstruct exactly how implementing a localized reverse logistics grid in the UAE or India mathematically reduces raw material OPEX by 40% and shield the corporation from geopolitical supply shock. You broadcast this artifact directly to the sovereign wealth funds, the Tier 1 manufacturing CEOs, and the global capital allocators. When an executive board watches the broadcast, They do not see a warehouse manager, they see an apex structural engineer. They see a sovereign operator who understands that he who controls the atom controls the empire. Look closely at the corporate hierarchy you are currently trying to climb. Are you fighting for a seat in a finance department playing the digital numbers that inflation will destroy? The game has fundamentally changed. The balance sheet is dead. The physical grid is absolute. Stop managing the spreadsheet. Master the life cycle of finite material. Command the reverse logistics. Become the sovereign resource architect and force the global economy to pay you the massive premium that absolute physical control demands. Process the data, execute the strategy, and I will see you at the top.